Sorry for the delay. Hello, everyone. Thank you very much for attending. Thank you for joining us today. And once again, thank you to fxstreet.com to give me the opportunity to speak. My name is Telmo Pinto. I'm the founder and director of market operations at Intuition Trading Group. For those who aren't familiar, we are a team of professional traders dedicated to provide simple, real-time, unified trading solutions for investors. Before we start here, it's important to read some parts of the disclaimer. Any alerts, levels, or trades I mentioned during the webinar, they are not a solicitation to invest, and you should carefully consider your financial situation prior to making any investment. It's preferable you seek advice from an independent financial advisor if you have any questions or concerns. To introduce a little bit of us, our main service is automated Forex trading signals. They are automated to the MT4 platform. Soon we'll have a new trade copy software that will allow clients manage all through the web. Okay. No need of MT4 platform open, so this will be real soon. Although we have an excellent trade copy now. You can go to our website, intuitiontrading.com, or go to the fxstreet.com URL web address. You can see our details there. If you are an fxstreet.com client user, you have 10% discount of the normal fees. So please go there, see if it fits in your portfolio. This is our statistics since inception, since beginning of the year. You have more details and real account statements in our website and on fxstreet.com website too. So please go there. If you have any questions, contact our support. We're more than willing to help you in all your questions. Okay. So let me open the platform here so we can start the webinar. Sorry, I'm a little better, but not 100% from the cold. It's okay. Just to let you know that if you have any questions, please feel free to write them on the chat or on the questions and answer board. I'm more than willing to answer during the webinar. Okay. So from Willard Gibson, I have no sound. Please check that because seems everything is okay. So some problem with your computer, try restart the webinar software. Maybe that is good. Okay. So last Thursday, let me open here the to introduce for those who are new here, I mainly trade with Renko bar charts. I don't use any indicator. Okay, I only use Renko bar charts. On the left is a 21 pips Renko bar charts. On the middle, the 34 pips Renko bar charts, and on the right, the 55 pips. I look also to the 89 pips and 133 pips, but okay, that is for the longer picture perspective. No need to be. Only if I see some interesting patterns there to show, but the mainly is these three time frames. Okay, I mainly trade the 21 and the 34, and sometimes on the 55 pips. Okay, so last Thursday I alert for the possibility. Let me do the annotation here. I alert for the possibility of this break. This was a pattern formation on the euro. I alert for the possibility, an entry at that level. Okay, seems market break. Okay, then retest this level here, and now is trying to making new hikes. Okay, continue to go up. Is interesting. how the markets continue to go up, and in the order book, okay, in the end order book, I will show you that later. Investors continue to add more positions to the sell side. Okay, it's curious, but okay, that happened 90% of the time. Okay, and when they reverse to long, okay, market will begin to go down. Okay, unfortunately, that is what happened in the market. It's no good for the retail trader. They always trying to catch the tops and the bottoms, and when market begin to break, okay, we have clear signals of a break. They continue to try to figure out higher levels to continue to add short positions. Okay, but clearly this is a up move. Okay, so this is the 34 pips. We'll have an important decision at this level now, and this level is around 130.80 level. 130.80, 131. If we can see market goes to 130.80, to this level here, let me put this with another color to show better. Okay. If we can see market can go to this level here, okay, sorry, okay, sorry about this. If you can see market break that level there, okay, this up here, okay, this up, you can see that market can break this level and could sustain or gaining more momentum here. We'll definitely see a possible attempt to the 130-170 level, okay, to the highs of September. We'll have there another pause at this level. This level is around 131.20 level, but this is the important area now, okay? This level here is a break of the 130.80, touch the 131, and if market can hold that level, we'll most probably see an attempt to the 131.20 or 131.70 level. Okay? This is what the 34 pips tell us now. The 34 pips, we can seek some, okay, like the 4, 8 or daily bars. Depends on the market volatility. Normally, or usually is the 4 hours, 8 hours charts. Okay? Daily if there is low or the lack of volatility in the market. Okay? So this is the view you can have now. This was the important level of the break. Okay? I remember on Thursday we were around this level here. Okay, on Thursday we are around this level here. I alert for the possibility of the break, and if break, okay, definitely I didn't want to be short if I see a break of this level. Like I explained sometimes, let me clean this. Okay, it's better. Like I alert sometimes, this is the breaking level. At this level here, even market come down, okay, and create here, come to this level, 129.20. This was a signal of a false break and could lead the market to go down. I prefer to be wrong and have a losing trade on this sell on this buy here, then continue with the sell from this level up. Okay? Because at this there is no sense to be short at the market when we see this break. Because market was consolidating here, okay, consolidating, 3 tests, break. First target, okay, is 1 bar above of the break. The second target will be here, 130.80, 131. Then we have this target, 131.20, and after that, the 131.70 level. Sorry. Okay, so these are the three targets that market can go there now. Okay. So I prefer to be wrong and lose these long trades here and have a losing trade in this long, in this entry here. Okay, market went down. I prefer to be wrong than old losing positions or old short positions when this break happen. Okay. So let's go now to the 31. This is the 34 pips. Okay, this can give you some higher perspective. Okay, this is the 55 pips. Okay, this can be equivalent or equal to the 34 to the 8 hours daily or even weekly. Okay, but mostly daily. Okay, the 55 pips is less. Is a higher time frame. As you can see, this is a chart since May, okay, beginning of June. You have only these bars. What happened here, and it's interesting to show you this situation, show you all, is that we have here the break of August till September. Then we have here some retracement. Okay, go up, down, the same pattern here. Okay. But we have a failure. This is a failure, okay? This was what could happen, as showed you earlier, on the 34 pips. We have a break here, market break, couldn't go to the upper level, and then reverse. At this level, we need to reverse our trade. Okay. We can go short from here and collect our profits here. What is important now is that market made what, okay, most analysts say is a V bottom here, okay? This is like a V bottom. I have more, okay, we have higher probability for market go to at least 130.90. This is critical level for the 55 pips. Okay, so we can expect to market goes and continues this up move till 130.90. At that level, can have some consolidation. Okay, to then go and try to tempt the 131.70 level. Okay, so my perspective for now for the euro is continue the up move. Okay. If there is a failure from here, this time frame, this 55 pips, we need to go to lower to have a better stop or to put better our stops. Okay. Because if we respect the 55 pips, we'll only enter short if we see a break of the 128.50-60 level. Okay. We need to see a break of this level in order to reverse short. Meanwhile, in the 21 pips, we can collect some profits, okay, when this come down. But for now, what I expect is a go to at least 130.80, 131, pause there, and then try to go and break the 131 to test the 131.70, okay, and clean this. At this level will be key important level. And I will show you on the order book why this is a key important level. Okay. So let's go now to the order book. Okay, so I can show you these levels at that. Okay, is this? Okay, let me put it in English. Sorry. Chat, questions and answers. Okay. So, this is from the opening. And when I say that I was a bit skeptical how the investors continue to sell, was because this, on Thursday, and if you follow my webinars, this is clearly a signal, or when we see these happenings, these situations happening here, this was a close, most probably market will clean these areas, market will go and clean this area, market tend to clean these areas here, and what market do, as soon as the opening, we saw the opening, market go up, 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 and then clean that area. But with that clean, we continue to see here on the short side more sellers appearing. If you can see the evolution, this is 1 hour bars. You can see continuation of the more sellers appear here. So this will continue to give the probability to the market to go higher. Then market pause here. After the break, market pause. The same thing happened to the buyers. We have here this gap to fill. This is not a gap. I call a gap because there is no agreement in the price. This means that the buyers that enter around 130 are winning money in the market. They are winning money in the market. But market tend to put them out, or close, or in areas that there is agreement in the price. Like happened at this level here. So the break, you can see there is agreement in the price. After the break, there is no agreement, because market break now. But as the day continues, this is Monday already, you see that market tends to have a look to create more sellers, or put pressure on the sellers. Then we have another break, and then you can see here that most buyers are already out of the market at these levels. We have here the area 130, 50 area that I think market will go there to clean the stops from these buyers, but the pressure are all on the seller side. You need to do one simple question. When you see this, you need to do one simple question. Who will lose more money? Will be the sellers or will be the buyers? Clearly, the sellers, if market continue to go up, will lose more money. So this is the key to interpret how market moves against the majority of the traders. If we see here a huge pressure on the sellers, the market tend to go higher. If we see a huge pressure on the buyers, the market tend to go down. The level I spoke on the charts before, and I say is really important, the 130, 170 area, is because of these stops here. This level here, above 132, begins now 131.80, 132, that extends till 133 level. These stops here are around 2.5 months now. So this is the place, or this is the area, speaking, that long-term traders or long-term investors are willing to give up of the short trade. We don't know if these stops are from sellers that enter at 138, 136. We don't have that information. Okay, we don't know that, unfortunately. We don't know that. Okay, we only know that these stops are here around 2.5 months. So this will be critical level for the possible reverse, okay, of the long-term trend. If we see a break of the 132, 132.50, we can see in the further month. I don't want to be a catalyst, but okay, I think we can see market goes to 135 or even 139 level. Okay, but this is a very long perspective. Okay, so this is levels for you to keep in your mind. Okay, I'm not telling that the market will go to 135 or 139 level. Okay, I'm not telling that. I'm only telling that if market go and break the 132, 132.50 level, the long-term position traders will reverse their position. And with that reverse will imply that market can go much further up. And much further up, we have the 135 important, 137.80 level more or less, and after that the 139 level, which can lead to a triple top on the, let me show you that so you can see. Okay, let me open here. Oh, sorry. Let me share here the platform. Okay. On the weekly, if we see a break of the 132, we'll have that. Let me do the annotation. Okay. We'll have this, okay, that can lead to this level here first, okay? Can go to this level is around 140, okay? But this is the weekly, okay? 139, 140, okay? First, we'll have here the 135 level, okay? That can go, and that's okay, tell that this could be a head and shoulders, okay? Inverted, and you could put this level to go up, which can lead to 139, okay? The extension will be 142. But this is the long perspective of the market, okay? If you are a long-term perspective, okay, you definitely need to look at these levels, okay? If you see a break of the 132, and most probably those stops we are seeing in the 132, 132.50 level in there on the order book will be probably the stops from these positional traders, okay? So if you see a break of this level, okay, 132 can lead to 139 or extension 142 level. This is a long-term perspective. Don't forget that, okay? If you are a long-term trader, okay, you should look at that. Although I'm a position trader, so I have these numbers in my mind, okay, to know what market can do, okay? But definitely I'm not a long-term trader, okay? So to give you the numbers, we need to be alert now, and let's go now to the 21 pips Renko bar chart, okay? Is the 21 pips, is the one I mainly trade, okay? This is the one I mainly trade, okay? So if you are short in the market, okay, you need to be careful because, okay, this could, we don't know, we have some possibility of market goes to here, and this is agreement in all time frames, is the 130.80 level, that if can break, and we know that can go to 131.20, and after that 131.70 level, Okay, if you are short in the market, okay, unfortunately you are on the wrong side. Right now you are on the wrong side. I'm not telling you that, okay, market will go further up or will go further down. We don't know that. But you are completely wrong at this time if you are short in the market. We had this break here that confirmed with a 34 pips rank over chart 2. Okay, we have this break now. So if market continue to go up, the levels we need to think or to have in mind is the first one is the 130.80 level. If break 131.20, after that 131.70 level. At 131.70 level, 138.7, 138.80 level, we know that the majority of the stops of the long terms or position traders begin to be clean. And that can go till 132 level, 133 level. This is 100 pips of stops that market can clean. Okay? That can lead to higher prices on the market. But on the other side, we need to think, okay, if market go to 130.80 and then reverse, this is the level we need to watch if hold or break. Is this? Because was the level of the breakup. And now will be for sure the support level of the market. This level here. And this level is the 130.20 level. Okay? If market go up and test that level, even can go to 130.20, that the longs are on favor. Okay? Market can go down here, add more momentum, and after that, break. If this don't happen, or if market decides to, okay, we are not have no momentum to go up, we are going to go down, we need to be, or I will not be comfortable if I see a break of the 130 level. Okay? And I will definitely be short on the market if I see a close around 129.80 level. Okay? And that target will be, we have here the 129.50 level, and after that, okay, this is the first one, and after that we'll have the 129. If we see a break of the 129, okay, then euro could go further down. The next support will be 128. Okay, you'll have here intermediate support at 128.60 level, around here, but we'll go definitely test this level here. So this is the idea or the analysis of the euro right now. Okay, in my opinion, after I see a break of the 130.20 level, I think most probably they will test the 130.80 and 131, and after that we'll go attempt the 131.20 and go and attempt the 131.70 level. Okay, that level will be the second key level. The first key level will be, okay, if market go here, test the 131.70 level. The second test will be a break of that level. Okay? This is the current situation that can lead the next month's trading, okay, or trading scenario for the euro. If we have a failure here at these levels, what this implies? This implies that, okay, market is not willing to, okay, to even test the September hikes at 131.70 level. Okay, we didn't have a test since September. We didn't have a test of those levels. Okay, we have here coming down. Okay, then further this was, but stays there around 131 level. Okay, 131.20 level. Okay, didn't test that level again. So if this is a failure, if market reverse here at this level, we can think, okay, we have here, let me put another color, we have here the first hike, okay, here we have a lower hike, and here you can have a lower hike, okay, can have these lower hikes, which implies that, okay, market has no momentum, no strength to go and test and break this level, can lead market go further down. Okay? So this is the key. This is the 34 pips. Okay? It's better to see the higher highs and or higher highs or lower highs. Okay? The waves of the market is important, and the best indicator we have to see if market is in an uptrend or in the downtrend is see the levels of the market. As you can see here, we have here a low, then we have another low. Okay, this was a break, but after this we have a higher low here. Okay, higher low here, higher low, higher low, higher low, and then, so this was clearly an uptrend. Okay, in this, after this break, we have a lower high, higher low, higher low. So this was a downtrend. After the break, this is curious to see how you can define simply the trends on with the Renkos. After this, okay, we have these steps. After this, you have here a consolidation pattern. Okay, to define, okay, market will try to go up, and we have here the up. Then go, break the trend, okay, try to go down, but didn't break that level. So another attempt will go made, another attempt up. After that, okay, market went down. At these levels, and as you can see, put another color. This level here and this level here tend to be congestion. Why? Because we have here the lower, okay, the higher lows here. So this was the area that the buyer sellers were fighting to know, okay, if market will go further up or if this was a break. After break, the lower low, what happened to the market? Down sharply. Okay. After that, market was trying to gain momentum. This was the first break. Then go, the retracement. Then we have further up. Okay. So this is a quick analysis you can do and look into the Renko bar charts and have no use of indicators. I don't use any indicators. Okay. I only follow the price because the price is the only leading indicator we can have. Okay. So is the levels you can see. This was the break. If market go there, you need to be alert for this level. If continue, you need to be alert for this level. Then you'll have for sure a congestion area if market go there. Okay. And this will repeat time after time. Okay. This is how market moves. Only if you have huge news like, okay, for instance, we have in 2008 and 2007, okay, that market, okay, tends to move 500 pips or even 1,000 pips, okay, quickly in 2 weeks. Okay, but that was due to economic news. Okay, that forex have to do it because we are trading currencies. Okay, and currencies are part of the economic part of the country. Okay, this is not a single company. This is the currency. Okay, in this case, the euro dollar is the currency of the European Union. Okay, so although I don't include or I don't have in my system any news. Okay, I tend to say that the news are always incorporated, or the majority of the times incorporated or included in the price. If they are not included in the price, is that the time that you see sharp moves. Okay, when you see sharp moves in the market, that's the main reason is that the news was not included already in the price, and they have that sharp move to go and to add that news. Okay, so we'll have the next in the money webinar on Thursday. So to the week and to the rest of the week, the important key levels are the 130.80. Okay, if all, we'll need to see a break of the 131.20. After that, 131.70, and that will be the second key level to break. As we saw, the stops that were around 132. If we see a break of 132.50, this could lead that market have a lot of space to go up. Okay, we can see in further month. Okay, you can see 135, 37, 39, or even 142. I'm not telling that the market will go there. We just need to be with these levels on your head. Okay. If market tend to go down, we need to be alert for a possible break of the 130 level. If break the 130.20 is our first signal of alert. If break 130, okay, around 129.80, I'm more than happy to short and collect some profits there. Okay, to go market to test at least 128.50, 128.80 level. Okay, if continue to go down, we'll have the 128.50, but it's a small one. After that, the major stop will be 128 level. Okay, so this is the levels you need to stay in your mind. Okay, and see the further developments of the market. Let me show you the questions. From Jevash Kumar, what would be the first target for euro right now, for today only? Okay, for today, I think we can see market test the 130.80 level. Okay, will be the first attempt of the market to say, okay, we are here to go and test the new highs, okay, or break the September highs. Okay, this will be for me my first target for today. Okay, if you see and market creates some kind of balance at this level, we can for sure see tomorrow, okay, 131.20. Although don't forget that we have plenty of news during the week. Okay, ECB meeting, okay, we have plenty of news during the week. Although the market tends to stay at, in this case that we are on uptrend, the ECB announcement for me will be like a confirmation of a break, of this break. If we see, for instance, market at the top of the channel, and top of the channel in this case will be 131.20, 131.70 area, and is okay for the ECB, we can see the confirmation of the break and a retracement at that time. Okay, that is how market leads. Okay, if market tend to go down, okay, if break this area, And okay, if market goes down for me, you need to be alert at the 130.20 level. If you are not long in the market, the best re-entry or the best entry for me right now is around 130.20. Okay? Because the risk reward is about 2 bars of risk, okay, to at least 3 profit. If you are more aggressive, okay, you can enter around 130.40 level, 45, if market go there. But to be conservative, this will be the preferable level to enter if you are not long, to enter or re-enter the market if you were already out. Okay? You are risking here about 40 pips, but your risk reward will be minimum, okay, 40 to 60 pips or even more. You can close partial profits here, okay, partial profits at this level, okay, another partial profits here, and we can go and you can close the position or trail your position up. Okay. So let me open here the okay. Okay, just to finish here, if you have any questions, okay, you can email me, no problem at all. I'm more than willing to answer all your questions at trading desk, okay, at intuitiontrading.com. Okay, you can go and see our website at intuitiontrading.com, or you can go to our web page at fxstreet.com. Okay, so I hope you all have enjoyed the session. Hope you see you all on Thursday. Thank you very much for attending. Have a rest of nice week and enjoyable trading for all. Okay, see you all on Thursday. Bye.